Yo guys, SafeFX, welcome back to another video. Pretty much continuing with the personal mentorship, mental whatever playlist. But yeah, I'm pretty sure this is something I've pretty much defined in one of my few previous videos. But yeah, today we're gonna be focusing on the London profile or London model, right? And personally, this is specific to New York. I mean, it's specific to Forex, right? Meaning that I hardly, close to never use this on features, because features mainly I'm trading on New York session or New York quarter, right? But yeah, the mechanics and everything is pretty much the same, right? But yeah, let's put it like this. So when it comes to the London range, right? When we're looking to take a trades within the London range, right? What we require or what we need is the Asia session range. That needs to be predefined. So we can say Asia range, right? And this range is always, never changes, to midnight New York time, right? This is our entire range, and then we can pretty much set out a box like this, and then this would be our London range. We can switch up the colors a bit. Purple is fine, and this one is always fixed to this time zone, right? This is our dealing range, right? Then we divide this range into quarters like this, right? If you want to see the quarters, the Gann box settings, this is pretty much how they look, right? You can mess around with the tone and stuff. This number is always fixed. They never change. Okay. The only range you're allowed to trade is this range right here. This defined range right here, which is Q3. So we would regard this as our kill zone, right? This is the only range in which we're looking to take trades, right? Then the first quarter, this is our accumulation range, right? We can set this out as Q1A, right? It's that simple. Then we can mark it out like this. So for us to take a trade within our kill zone range, right? Let me also specify the times. It's always gonna be 03. Never changes to 04:30. I repeat, it never changes. It's always fixed at these times, right? The rules are, we have the London range, the Asia range, which is a full defined range, right? For us to go long, that's gonna be our first basis, but it's universal to both. Price needs to sweep for us to go short, right? Price needs to sweep the London high, the Asia high. I keep saying London, but yeah, then we can say top. Then we can, okay. Asia low. Perfect. And for us to go short, right, meaning that we're looking for shorts, price needs to sweep two range highs. It also needs to sweep the Q1 high. This is always specific. It always needs to happen like this. It never changes, I repeat. Fixed, defined rules, very easy to follow unless you do not have discipline, because most people in the early stages do not have that. But yeah, and when we say these two highs have to be swept, right, they need to be swept within Q2, this price range right there, right? So we'll say this is Q. We can mark this as well. We'll say this is I don't know, Q2, right? We'll say that's our M, our manipulation, Q2 manipulation. In simple terms, when Q2 opens and Q2 is fixed to 01, 2, 03, I believe. Perfect. Let's just make like that, right? Okay. Simple terms, Q2 should sweep Asia high and Q1 high, right? Or vice versa. Whichever one it sweeps first, that doesn't really matter. But usually, I would be more comfortable, or I prefer the ones where price sweeps Q1 first, then draws higher to sweep Q2, and then draws lower, right? In simple terms, if you were to look at this from a pattern base, right, it would be pretty much something like this if the ranges are confusing. Like this, we can say price draws. It would be pretty much like this. Then we can do this like this, right? This is how we would define it, right? Then, in simple terms, within Q3, we're looking for lower prices, which would be pretty much something like that. And our draw on liquidity, our target would be the Asia low, right? First, initially, it would be our Q1 low, right? That we take partials there, and then our Asia low, or any obvious low that would present itself, whether it's a Q2 low or Q1 low. But the highest or the best case scenario would be our Asia low, right? So step 1, price sweep, Asia high. Step 2, price sweeps Q1 high, whichever one first within Q2. And then from Q2, we're looking for short prices. We're looking for displacement, meaning that even if displacement happened within Q2 and we are expecting low prices, all our trades will still have to be taken within this range, right? Because it takes a bit more experience to fully understand what you're looking for to be taking the distribution phase within Q2, right? Okay, right now I'm gonna try showing you all this within a live chart. Okay, here we are. And another thing that you require within this range, right? I'm forgetting. You need price to either draw to a higher time frame PD array that it's gonna react off, right? This can be a fair value gap, right? It's that simple. Price should sweep Asia high, then draw to a fair value gap, right? Like this, and then you seek lower prices, right? Okay, now let's get into it. Got my indicators here. Okay, if you can pay attention, right? This is our Asia low, this is our Asia high. Asia high has just currently been swept, right? And our dealing range would be from midnight to 6 a.m., which would be right there, like that, right? And then this is our dealing range. This is where we'd be looking to take trades lower, right? So we can mark that out as our Q3. We'll say Q3 kill zone. This is the only area in which we're looking to take trades. Okay, perfect. Now let's see. We're currently in a new day open. Let's see. See, notice how price within Q1 sweeps the London high, right? This is Asia high. I mean, this needs to be fixed within the source code. I'll fix that. But yeah, price sweeps the Asia high, right? Draws higher. So I want to see where Q1 is gonna close. Let's just see. The price. This is where Q2 begins, 130. Perfect. So, London high Asia high. Asia high has been swept, right? What are we looking for now? We want to see price sweep the Q1 high, right? Then within our Q3 range, we'll be looking for lower prices, right? Let's see. Price spikes lower, manages to pretty much sweep the low, right? So if you can pay attention, price within Q2, right, has swept Q1's high, right? And also swept the Asia high, right? Right now, heading into this range right here, we are pretty much looking, let me do it like this. We are pretty much looking for lower prices. Can do this like this so we know this is our dealing range, right? Okay, perfect. We're pretty much looking for lower prices. Let's see. Price draws lower. Impulsive spike lower, right? What is this? We have a breaker right there. Can even hide these, right? Let's just lift this one on. We have our defined and identified breaker, which indicates a shift in market structure. So we just say breaker block, bottom, right. Then we drag it all the way, right? So if price had closed below the range like this, right, there's two ways in which we can approach this. As soon as price closed lower, we would have entered a trade. But the problem is we are not within Q3, right? We're within Q2, right? Okay, so how would we approach this? We have a potential fair value gap right here that price could draw to, right? Let's see. Price spikes lower, so dips lower, and now we have this right here, which is a order block range, so we can reduce this, and then we got a bearish order block right there, right? We have a fair value gap right there, right? But now, which one are you gonna use and which one do you trust? We have even one up here. Which one do you trust, right? You need to pretty much pay attention to what's happening on the lower time frame. What does that mean? On a lower time frame, we'll be pretty much looking for a breaker block as soon as price reaches one of these PDRAs, right? So like right now, if we're still looking for bearish price, our perspective doesn't change. We're going to the 1 minute time frame, right? Got our order block right there. Let's see. Now we are within Q3, right? We are within the Q3 range. Let's see. Can even remove this now because we are aware of it. Price goes higher. Goes. It taps the 5 minutes bearish order. 5 minute bearish order block. Right? So what now? We want to see displacement. What is displacement? Price needs to pretty much create some form of a breaker block profile, which was provided within the previous introduction videos of what a breaker block is, right? The lowest bearish candle. Then, as soon as price closes below it, you can execute your trade, right? Okay. You can even remove this. Price could still potentially drop back into that fair value gap. Let's see. Impulsive move lower. Let's see. This right here could be a potential breaker. Okay. Price impulsively draws lower, right? As soon as price does this, this is where you go shorts. If you're looking for shorts, that's where you're going to see low prices. But like now, where do you place your stop loss? generally you'd want to see your stop loss above price right there, right? But like now, paying attention, we have a fair value gap above price and we have an order block range. Those are two period ranges the price will most likely draw to. So in simple terms, how I would approach it is I would want to place my stop loss just above the 5-minute fair value gap because it's in close proximity to my entry, right? So we can see 5-minute fair value gap slash CB, sell side imbalance, buy side inefficient, right? So say right there. Our target is initially the low right here, right? And now if you want to be fancy or are not comfortable with the risk to reward, you'd want to refine price. The problem is price is not always going to let you do that, meaning that you want to see price create some form of an inefficiency, right? And then as soon as price reacts off it, then you can allow yourself to play your stop loss around here, right? Even if you place it like this, it's still correct. But personally, I just do not like doing it like that, especially when I'm like taking 1-minute entries, right? So our standard deviation, that's what we use as our target, where we would place our standard deviation on the highest before the breaker and to the swing low. So would be from this high to this low. Okay, then the lowest one below the London sell side, all the down there. Okay, it's not visible, but yeah, that would be pretty much our drawn liquidity. So let's see. Price ranges. Got two fair value gaps right there. This could have been an additional entry, or you'd wait for price to drop back into this fair value gap, right? Then you can even place your stop loss at break even. Okay. The price hits your target, right? That's generally how you want to see price move, right? And like the beauty of this, right, is that when you are within a low resistance run, right, all this will happen within the Q3 range, right? So removing all this noise because they've pretty much served their purpose, right? If you draw this lower like this, everything happened within Q3, right? So therefore, when price sweeps significant lows and highs, right, which are Asia, which is the Asia low, right, there's a very, 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 very high chance that if Q3 was a low resistant run like this, right, Q4, right, which is our last quarter within our deviations like this, right, could be a potential drawback higher into an additional, it could, in simple terms, it could be a potential reversal, right? So now let's just see our price books, right? And usually when it's like this, right, I would want to approach it from a micro level, right? What does that mean? I'm disregarding everything, right? Let me just bring back all that. And my only focus is the manipulation range, which was this range right there, right? This range right there, right? Can remove everything else, right? So in simple terms, price has swept the Asia low and price has swept the manipulation low, which was Q2. In simple terms, this is a new profile, right? This is simply what I tend to look for every time price reaches the opposite side within a specific time range, right? So we can even make this rate because that's the manipulation range, right? Then, yeah. So price has swept Q2 sell side, right? Let me make this way. We'll say Q2 low. The places for the left. Like that, right? So what do we want to see? We want to scale down to a lower time frame from the 5 minutes all the way to the 1 minute. This is micro session trading, right? Okay. How do you want to approach it? You want to take all your trades within Q4. You want to see displacements on the 1 minute or the 5 minute time frame. Whichever one is correct. Let's see. Price draws higher. We even got a shift instead of delivery right here. So that's our breaker range right there. So we would identify this range right here as a breaker, right? Specifically this candle right there. If you fail to identify this one, even this one would be the most valid one. So we can even use that one, right? Okay. Then that's our breaker, right? And pay attention, price draws back to this fair value gap right there. Price draws back into this fair value gap right there. So we've even got an order block right here. So what are we looking for now? We've even got a fair value gap right there. Anywhere within this range on a lower time frame, you want to see displacement, right? So how I would approach this from a micro level, right? Your trades, if you're on MetaTrader, they would still be on the 1 minute time frame, but you'd be monitoring your trade on TradingView within the seconds chart, right? You want to see displacements on the 30-second chart. See, so got a swing high right there. That could be a potential displacement. Let's see. Got a new one right here. Let's see. Okay, price closes above this range right there. So that would be a long. We just stopped just below price right there, but we got an order block just right below price. So I would mainly place my stop just below this volume imbalance, this vacuum gap, in a simple way, right, to explain it. And then my drawn liquidity would be the previous quarter high, right? So Q3, trading within Q3, my drawn liquidity would be Q3, trading within Q4, right? My drawn liquidity would be Q1. Let me rephrase that. So trading within Q4, right? My drawn liquidity would be Q3's high, right? Which is initially right there, right? Then using standard deviation projections, I would pretty much place it like this. Then we can reverse it. Then target would be right there, right? Okay, now let's see. Okay, price draws higher. Got a fair value gap. The price could drop back to. We can even place this at break even. Then price takes you out just right above the previous quarter range, high and low, right? Hopefully this makes sense. Hopefully you found this insightful, but that's pretty much the characteristics of how price books based on time and price, right? And also notice, you should know that when price is reacting off these levels, right? Let me remove all annotations. For us to have taken this short, price had to be respecting or reacting off a PDRA right here or down here, right? The one here was a 5-minute entry, so therefore we need a higher time frame PDRA. Usually, I like using the 90-minute and the 30-minute time frame to look for an inefficiency range, right? Whichever one you identify first, that's gonna be the easiest one for you to see. So, if you saw this fair value gap right here, price reacts off it. Pay attention, this candlestick formed at 30 minutes past 12, right? This high right here was 30 minutes past 12. The price draws lower, right? When price reacts higher within this range, what was it reacting off? Cut it through this, went through this order block, but respected this rejection block right here. So we can do it like this. Respected it, drew higher. The same way right here. We have a rejection block, right? Price respects the 50% level, meaning that it doesn't close above it before it goes short, right? So hopefully I made some sense within this video. Hopefully you found everything insightful, right? Hopefully if you enjoyed this video, there's pretty much going to be more coming, right? I'm just trying to find the simplest ways and the simplest examples that I can pretty much provide to you within the simplest way, because these things are really PhD things, but the simpler the better, you know. But yeah, hopefully you found this insightful, and stay safe.